LinkedIn's latest connection? How about $1 billion? Investor Beat starts now. Thanks for watching. I'm Chris Hill. All lights were green on Wall Street today. The Dow, NASDAQ, and S&P 500 all rose in the wake of the Federal Reserve's Beige Book report, which had the U.S. economy expanding at a moderate pace between early July and late August. Joining me in studio, David Meier, Matt Argersinger. Guys, our top story. Shares of LinkedIn down slightly today after the company filed paperwork with the SEC to sell $1 billion worth of stock in a secondary offering. LinkedIn says it will use the money for product development and international expansion. Good move?
Great move. I mean, stock's an all-time high, and as we discussed earlier,
a little bit lower than an all-time high.
Okay, just below an all-time high, but I guess doubled year-to-date so far. And as we discussed before, I mean, the best time to raise capital is when you actually don't need the capital. I mean, LinkedIn doesn't need the capital. Their balance sheet is in great shape. They're minting cash, $250 million cash flow over the last 12 months. They don't need it, but this is great. I mean, this is your stock's an all-time high. It's a great time to raise capital.
There are some people, some investors out there, they look at this and they say, nope, it's dilution. I don't want it. It's a red flag. Is this really ultimately a gut check on how you feel about the management?
That's a very good point. I will say on dilution, it's not dilution unless management destroys value with the capital. So if they are able to invest in things that create value, i.e. new products, maybe a good acquisition, there's plenty of things that they can reinvest in, then this is exactly what shareholders want. But I think it does come down to management. They are going to have to figure out where to put this $1 billion.
As you mentioned, the shares have more than doubled year to date. Do you like the stock at this price?
I like LinkedIn long term for a lot of reasons. Today's announcement of the $1 billion capital raise, it doesn't really sway my opinion that much. And it strengthens it a little bit because I think they've really shored up their capital base to make all those investments that Dave's talking about. So
all right, let's get to some of the day's movers and shakers. Ciena Corp up big after third quarter results came in higher than expected. Ciena makes fiber optic network gear, and I'm assuming business is going well, Dave.
Yes, it is. When you report higher than expected sales and profits, business is going well. In fact, the company today said telecoms are spending, and businesses like Ciena are feeling the benefits of that. Looking forward, the company's revenue guidance for next quarter came in ahead of analyst estimates as well. So again, it looks like a win. It's a trifecta, a win-win-win for Ciena today.
Dollar General hitting a new all-time high after second quarter results came in higher than expected. The retailer lowered full-year guidance back in June and maintained that guidance this morning. Sounds like it's a little bit better to be cautious if you're Dollar General.
It is. But the one thing that Dollar General doesn't really sell a lot of is clothing. I mean, if you're any kind of retailer that sells clothing, you've done miserable this quarter. But if you're a company like Dollar General, which sells, among other things, tobacco products, candy and snacks, perishable items, which are all selling really well, you're going to do well. And their same-store sales are very strong. Again, one of those retailers that's kind of fits this economy that we're in right now. People are okay spending for household items on the very low end, not spending on the high end. So Dollar General fits the theme perfectly.
J.C. Penney on the rise after two hedge funds combined to buy more than 14% of the troubled retailer. They're clearly hoping to avoid Bill Ackman's fate, in which the hedge fund manager recently lost about $500 million.
Yeah.
J.C. Penney.
Yeah, interestingly, fellow hedge funders, Larry Robbins and Rich Perry increasing their stakes. And today we learned Kyle Bass, another big-time hedge fund manager, now has a 5+% position. Kicking a man while he's down and throwing salt on his wounds. I guess on Wall Street, that's business as usual.
And finally, Francesca's holdings down big after second quarter results were worse than expected. The women's retailer also lowered guidance, sending shares to their lowest point in almost 2 years. Is there any silver lining here, or is this just, as you said, if you're selling clothes, it's a tough time to be in business?
Silver lining, the stock's down a lot, so if you were hoping to get Francesca cheaper, you can. I mean, and I'm an expert in women's apparel. No, sure. Really not. But what I can see is, though, this is yet another apparel company, clothing company that's just really hitting the bricks, and it just seems like that's such a pervasive thing. And I know the CEO of Francesca said there's really right now a lack of a dominant apparel fashion trend, and I think that's true. I just think all these companies are sort of grasping for that right trend, back to school, fall fashion, whatever it is, it's not working, and here it shows again in Francesca.
All right, that's going to do it for today's action. Let's look ahead to the rest of the week. Dave, what's the stock you've got on your radar?
Stock I have on my radar is Infinera, also a fiber optic equipment maker. The company recently came out with an investor presentation, echoed the same sentiments that Ciena did, which is telecoms are spending. Infinera is now the market leader in 100G long-haul ports. You don't need to worry about the jargon. Just know that it's the market share leader, and the reason is it has the best technology. This is a stock I've owned and followed for a long time, and I think today and going forward, this is a stock long-term investors want to own.
All right, Matt, what about you?
Zumiez, I can't get enough of apparel retailers. No, I mean, between Abercrombie and Fitch, Aeropostale, American Eagle, here we have Zumiez again. Can it be the one that sort of defies the odds and has a great quarter? I doubt it. I'm expecting bad results tomorrow, just to see if we can confirm the trend. So we'll have to see. Zumiez.
Might be a train wreck worth watching.
Yeah, it could be. I'm watching.
All right, for Matt Argersinger and Dave Meier, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.